Taiwan Semiconductor TSMC just reported their quarterly earnings, which means earnings season has officially started for this channel. Now the stock is up around 5 to 6% at the time of making this video. Why is that? Well, the numbers, they beat expectations across the board, with regards to revenue, gross margins, and even for guidance, they beat the estimates as well. For fiscal year 2024, they expect revenue to grow 20% year over year, which was also a bit higher than what the market was expecting. Now, there is one downside to this report, and that's with regards to the second Arizona plant. We got more information here. So with the second Arizona plant, the company expects to start operations in 2027 or 2028, later than TSM's prior guidance of 2026. They said, I think that also has to do with how much incentives the fab, the US government can provide. And yes, there will be a gap. At least current planning is 27 or 28. That will be the time frame. Now, with regards to the one in Japan, the company plans to hold an opening ceremony in February, and volume production is on track for the fourth quarter of 2024. The plant will use 12, 16, 22, 28 nanometer process technologies. Now, if you want to know what the expectations are for the coming years, here they are. For fiscal year 2024, sales growth of 21.14% year over year, with EPS growing 18% year over year. Fiscal year 2025, 19.21% year over year growth for sales, and EPS to grow close to 23% year over year. So that's a reacceleration at the bottom line. Now, currently, with regards to valuation, of course, with the 5% bump, we are probably going to get a bit closer here to the mean. Not by much, but right now you're getting 16.5 times compared to 19.4 times, the 5-year mean for the forward PE. EV to EBITDA is also a bit lower. Price to sales is at 6 times, and price to free cash flow, this is in the last 12 months, 69.3 times compared to 47.7 times. Now, with regards to free cash flow, the expectations for calendar year 2024 is for free cash flow to increase 123.21%. So like I said, the metric we just seen is the last 12 months. If we look at the next 12 months, the metrics would have been much, much better. We know calendar year 2023 was a down year for TSM. Last thing here before jumping to the numbers, so a comment by the VP and Chief Financial Officer. Our fourth quarter business was supported by continued strong ramp of our industry-leading 3nm technology. Moving into first quarter of 2024, we expect our business to be impacted by smartphone seasonality, partially offset by continued HPC-related demand. And so their expectations for Q1 2024, revenue is expected to be between $18 to $18.8 billion, be down quarter over quarter, but it's normal. Gross profit margin is expected to be between 52 and 54%, and operating profit is expected to be between 40 and 42%. Now, before continuing, if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not. We're going to cover a lot of companies during this earnings season, so make sure you hit that subscribe button. It's free, so why not? If you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to full.com/couchinvestor. Thank you very much. So, first up, a major overview. Net revenue was $19.62 billion. That's an increase of 13.6% year over year. With regards to gross margin, that came in at 53%, which is 1.3 percentage points lower than the same quarter last year. With regards to operating margin, we're a bit flat-ish year over year, coming in at 41.6%. If we look at net profit margin, the same story there, 38.2%, down 0.4 percentage points year over year. Now, return on equity, still very, very good here, 28.1%, and that's up 2.3 percentage points year over year. Now, where does the majority of their revenue come from? Well, now it's pretty clear. You're getting already 50% of revenue from 3nm and 5nm. Then all the rest, all the other 50%, 17% of those from the 7, and then all the rest, which also shows you how great of a business they operate, because this is old technology. This is something that they've invested years and years ago and are still generating revenues years and years after, which bodes well for a company like Intel, who also wants to compete in the foundry business. Here we can see basically the big switch 2022 to 2023. I mean, in 2022, 3 nanometer was basically non-existent. And so now with an increase in 3 nanometer, we're going to see the red pie here, piece of the pie, become bigger and bigger in 2024. As for the platform for Q4, it's basically a split between HPC and smartphone. Next quarter, as they said, they expect smartphone to be a bit down, but since HPC is still having that momentum, that shouldn't be an issue. Now, it's also nice to see that automotive has been going up here 13%. This is quarter over quarter. There has been some weakness in that a bit before. IoT is still down 29%, DCE down 35%. Now, if we look at the overall year of 2023, here HPC beating out smartphone, and we can also see that smartphone had a weakness as expected. If you've been listening to the news, smartphone weakness, it's down 8% year over year, automotive now up 15% year over year. The board of directors also approved a $3.5 cash dividend, this is Taiwanese dollars by the way, for the third quarter of 2023, and set March 18 as ex-dividend date, March 24 as the record date, and April 11, 2024 as the distribution date, for those of you that are keeping track for the dividend payouts. Now, touching back to the revenue by technology, you might see here the 4 nanometer missing, and that's because it's still on track for volume production for the first half of 2025. Now, quickly looking at the graph, of course, yesterday we closed at just under $103. Right now, we're going to open closer to $110, which is exactly where we were back in June of 2023. Couldn't hold there, by the way, this is on the weekly. So keep an eye on what's happening during the day, because previously we got rejected there. There weren't that many buyers, more sellers, and then it went all the way back down. Of course, the market didn't really have the momentum it has had in the last couple of weeks and months, but good numbers for the company, good outlook as well, good progress despite the delay in the second Arizona plant. I think the market appreciates their outlook for 2024. It's good news for TSM. It's great news for all the other chip players there as well. Probably some good news there for Intel, but with Intel, we're going to have their own earnings report and earnings call and comments, which will focus on that, I think, in the next week or two. But overall, good report by this company, by this huge and important player. Of course, take the geopolitical risk into consideration. But overall, good report, great way to start this earnings season. I'm happy to see these numbers. And again, it's very important to know that when you operate such a business, a foundry, the technologies that you're investing heavily in will still generate a lot of revenue in the years and years ahead. So it's not just a one-time thing and then, okay, that's it, we're done. No, as you see, the older technologies are still being used and are still generating quite a lot of money for that company. Very important to remember. So overall, that will be it for this video. Of course, do share your thoughts down in the comments below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye-bye.